Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
All in all, we've seen a bit of a decent morning that's coming from the Asian markets as of now.
Still basically around treading water around the 20-day moving average for both the Nifty and the Nifty banks.
The management of Encora, particularly over the last 2 years, has done an exceptional job.
26,125, it's absolutely flat.
We are also looking at the stocks which are having growth at reasonable price.
Markets firmly in the green. The the frontline index is able to retain that 26,200 mark.
JP Morgan too, they've downgraded the stock to neutral. Target has been cut from 475 to 375.
Once completed, Sapphire Foods will cease to exist as a separate listed entity.
Hyundai also, domestic remains a drag. It has seen a growth of just 0.5%.
We started the day on strong footing. That has continued to be the case. Nifty is above the 26,300 mark.
Well, we've been holding right below the all-time high on the Nifty. The Nifty Bank, of course, briefly making a new high and what 30-odd point distance between where we are, 20 now, as you can see at the bottom of the screen. So 26,298 and remarkably steady around those levels for the last hour or so. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Mangala. Mangala, bhai.
Hi, good afternoon, Prashant. This morning we were wondering whether the market's poised for a bit of a range-bound trade or not. It turns out that maybe once the higher end of that range was breached on low volumes, a lot of the short call writers had to cover their positions, and we've seen an accelerated move closer to a record high on the Nifty and a record high on the Nifty Bank already. So let's see where that goes from here on. What's actually doing a lot better today and would give a lot of solace to a lot of the portfolios which were hurt in 2025 are the broader markets. 2,000 stocks in the green for just about 850 which are in the red. And it's not only the number of stocks which are doing well, it is also the quantum of gains that we're seeing on these stocks, be it something like a Bosch, SJVN, or you look at a lot of the top gainers. We have Torrent Power, which is up 5%, NHPC up around 5% as well, Irida. So it's across the board gains coming in from a lot of these names. And Hindustan Copper, that record run continues after a brief pause in yesterday's trading session as well. That's up around 4%. And as we speak, Coal India, the top gainer on the Nifty. So across the board, big gains coming in. We'll discuss more of that as we move along the show. Let's tell you what we've lined up for you. Friday cheer on D Street, the banking index, it's a record high. Nifty nears life highs around that 26,300 mark right now. The broader market outperformance continues. In fact, the mid-cap index too is about 11 points away from a record high. All sectors are upbeat, barring the consumption pack, which is led lower by ITC, which continues to be the top drag on the frontline index. Shares of state-owned Coal India scale a fresh 52-week high on the company, now permitting direct foreigners alongside domestic buyers to partake in the e-auctions. A detailed analysis coming up in just a bit. A transformative deal all set to reshape India's QSR landscape. Sapphire Foods is all set to merge into Devyani International. A comprehensive analysis on what this means for both parties and shareholders coming up on Closing Bell. And shares of Nifty Heavyweight Reliance Industries higher in trade as well, closer to a fresh record high as Morgan Stanley, among other brokerages, also reiterates its overweight stance, maintains a price target of near 1,850 rupees per share. The rationale behind that and more coming up soon.
Okay, well, how should you position yourself in the last hour? That's essentially the question now. Mitesh Thakkar is with us from Bonanza Portfolio. Mitesh, good to have you with us here. Thanks for joining us. Almost at a new high on the Nifty. And I was looking at Reliance as well, which, by the way, is also now closer and closer to a fresh high there. Just your thoughts on these two, and then we'll get to specific trades from you, Mitesh.
Good afternoon, Prashant. I think, I was talking about the Bank Nifty. Actually, if that kind of gave a breakout beyond 59,800, we said that, we will see the Nifty kind of follow through. And while there was no signal on the Nifty, I think the Bank Nifty pulled through. And maybe the Nifty was hurt by the movement in ITC over the last couple of days. Yesterday and then today, we have seen ITC being a big drag. But at least this kind of, suggests that a closing about 26,200 looks very likely, 220. And therefore, the next targets on the Nifty, which is close to about 26,400, should be there. If we start getting past 26,400, 410, then I think we might have a kind of a fast momentum kind of a move on the upside. But for the time being, I'd still, be marginally positive on the Nifty and keep a target at 26,400. And between the two indices, I think the Bank Nifty looks a better bet. On the stock side, I have buy calls on Adani Green, which is a buy with a stop at 1,025 for targets of 1,070. And Chola Finance has hit a fresh high, good breakout above multiple highs earlier. So Chola Finance is a buy with a stop at about 1,758 for targets of 1,830.
Thanks very much, Mitesh, for that. Appreciate it. Well, I think what we're going to do is, talk about the big deal, right? Which is the Sapphire Devyani deal, which came through, yesterday, and long awaited. It has gone through. Mangalam, you've been sort of looking at this, in terms of what this means as far as synergies, etc., is concerned. So take it away on the big wall.
It is after years of speculation that the Devyani and Sapphire merger that has finally been announced, and Sapphire Foods board has agreed to amalgamate with Devyani International as well, and add to that, it brings together Yum Brands' two listed franchisees in India. The swap ratio at 177 Devyani shares for every 100 Sapphire shares based on current market price is absolutely at par versus the closing price. And Devyani will also pick up 19 KFC outlets in Hyderabad, which are currently operated by Yum itself, making Devyani International the sole franchisor of Yum Brands in the country. The deal done at current market valuations, the street was expecting a premium for Sapphire, which is why the Sapphire stock is lower. However, going from here on, both these stocks will move in tandem because the ratio is now locked. For Devyani, it's a definite benefit because one, scale and synergies come by, overlap and costs go down, operating leverage kicks in, and at these levels, the merger also looks valuation accretive. We'll talk about more in detail on that as well. If you look at the combined numbers as well, Devyani currently does about 4,900 crores of sales and has about 2,000 stores. The combined pro forma business will have over 3,000 stores, and the revenue jumps to 7,800 crores and closer to $1 billion. Plus, the operating EBITDA moves to about 750 crores. Club both of them together with margins inching closer to 10%. What changes for Devyani shareholders and why this is value accretive? Revenue goes up by 58%, EBITDA grows up by 53%, and this is not counting synergies yet or scale yet. And for all of this, what they basically get to do is dilute their equity by 46%. So that's value accretion. EBITDA goes up by 53, revenue goes up by 58, equity-based dilution is just around 46%. So the key things to track from now on here is one, the performance of store economics, revenues and costs. The second thing we'll be watching out for, store format expansion, how, where and how fast. And third, the mix, whether there will be dine-in versus delivery, what brands will they expand so far. Pizza Hut is underperforming, KFC is doing well. What geographies will they see more growth in? If you look at the valuations in the quick service restaurant space, Jubilant Foodworks still commands premium valuation at 23 times. Devyani at 17 times, acquiring Sapphire at 14 times is value accretion once again. Westlife is at around 18.5 times. Restaurant Brands is 8 times, deep value play. And there are important triggers for this as well. Possible recovery post GST 2.0 and a likely transaction in Restaurant Brands where the promoter is looking to pair stake. Vivek, our colleague, had broken that story earlier as well. Then multiple players coming in the investor space. We have Wow Momo, potential listing of Subway and Cure Foods, and competition coming in from food delivery apps moving into their own captive kitchens. There is Zepto Cafe and a lot of the other things coming in from the houses of Zomato and Swiggy. In a market chasing scale, margins and visibility, this deal checks all three boxes. Consolidation is back on the menu and QSR stocks firmly back in play.
All right. Mangalam, thanks very much for that. Sudeep Bandyopadhyay is with us. Sudeep, good to have you with us here. Thank you for joining us. Just your view on Sapphire, Devyani, and what do you make of it?
Prashant, this was kind of expected for a very long time. Finally, it has happened. Definitely, this is great news, particularly from a Devyani point of view. I think the deal is to an extent skewed towards Devyani, and definitely the value accretive from it, Devyani point of view. So shareholders of Devyani definitely should look forward to this transaction. Overall, of course, it will depend going forward how they extract the benefits of consolidation. As things stand today, I think Devyani's performance on a margin front is also slightly better than Sapphire. We all know Pizza Hut is not doing that well in India. Potential is huge. Looking at what Domino's have been doing, so if Devyani can really ramp up and kind of extract efficiencies, I'm sure it has got a potential for significant upside from here on as well. That's point number one. And point number two is because it's happened at a kind of a market valuation without any incremental premium for Sapphire, I think again it does favor Devyani. We are definitely positive on the transaction, and we believe that Devyani is and continues to remain a buy from a long-term perspective.
All right, take that point. The last time a group company, Varun Beverages, they got the control of the entire nation's Pepsi bottling and beyond that as well. Since then, the stock has seen a big up move and re-rating as well. Will a similar thing happen in this industry? Perhaps yes, perhaps not. We'll only have to wait, for the time to pass and understand, because both industries very different. Pepsi has a larger market share in India as compared to what, say, Yum Brands has in the QSR space. There are obviously a lot more players. This business a lot more different from that. But Devyani having sole control of all these brands is something that we will be watching out for. But hang there, Sudeep, because we have Coal India. That's the one that's surging away, the top gainer on the Nifty, up over 6.5% right now. Foreigners now allowed to participate in e-auctions for coal. Sudarshan joins us to tell us more. Sud, the news has taken the stock to a fresh 52-week high.
That's correct. And besides this, there are several other news for Coal India as well. So I'll first start with the stock move. In the last 1 month, the stock has moved more than 12%. And today, it's set to see the biggest single-day gain in the more than 2 years. Now, talking about the news, today, Coal India has announced that its board has approved the participation of foreign consumers from 3 countries. And those countries are Bhutan, Myanmar and Bangladesh, Bhutan, Nepal and Bangladesh. So now consumers from these 3 countries can directly participate in the e-auction that Coal India conducts, and that would happen via single window. So far, consumers from these countries can buy Coal India's coal only through domestic coal traders. So this is one news. Another update recently that Coal India board had approved to start the listing process of 2 of its main subsidiaries, and those are Mahanadi Coalfields and Southeastern Coalfields. Remember, these two together form more than 50% of Coal India's production. And apart from these two, Coal India had already begun the process to list other 2 subsidiaries, and those are BCCL and CMP-DIL. So companies expected to have 4 subsidiaries listed in FY27. Apart from these 2 updates, Coal India also recently has given the update of production and offtake. So in December, production had increased by 5%, while offtake was down by 5%. If you take a look at the data of April to December, both production and offtake had fallen in the range of 2 to 6%, and so far Coal India has done production in FY26 so far 529 million tons. That is 60% of Coal India's production target that it has given for FY26. So we'll have to see if this new proposal that Coal India has approved, if it helps company to increase the offtake, because that's the main target. They have given the approval for foreign participation.
Right, Sudeep, Coal India, does this provide an incremental benefit to the company? I mean, as a buying opportunity, another reason for one to buy Coal India? Or do you believe that there's another reason to exit after the stock has rallied so much?
No. I think it's a good opportunity to buy. In fact, we have been recommending Coal India. It did look good even before this news. And of course, this will definitely help. Production has improved, but offtake hasn't improved that much. So this, providing a window for Bangladesh, Nepal, as well as Bhutan to buy through e-auction definitely does help. Will help the e-auction realizations and increase the offtake, which should augur well. I think FY27 listing of 4 subsidiaries definitely should, result in value unlocking and, help the valuation of Coal India itself. So from an investor's point of view, I will definitely recommend buying in and holding on to Coal India for 1.5 years till the time the value unlocking gets over. Look, the Coal India's problem was efficiency. I think if they can improve efficiency through multiple measures, including increasing the number of buyers, participants in the e-auction, that should do well for Coal India from an efficiency and profitability point of view, and that's what was required.
That's a massive move. Actually, when you think about it, it's all PSUs, right? Look at Coal India. Yeah. I mean, of course, disparate, different reasons. But look at something like a REC, which is higher, sharply higher at this point. And Nalco, aluminum prices hitting $3,000, I think, is another one. So, I mean, there's enough and more action and activity as far as Hindustan Copper, of course. I mean, continues its move after the 50% rally that we saw last in 2025.
A lot of the power names are actually doing well today. Yeah. We have Torrent Power, which is up 5.5%. NHPC is another one, which is up 5%. Even the renewable guys, IREDA is up 5%. And CESC, that's another one, which is up 5%. I wonder whether there is anything, fundamental that has changed, or maybe it's just...
In the PSU space in Mangalam, I mean, just to go on with that thread, right? You mentioned IRDA. NHPC, look at SJVN. SJVN is up 11%. So, I mean, again, it's all just very, very all over the place. But IDBI is up 10%, by the way. Right? Yep. IDBI is the third largest volume-led mover. So, and we started talking about Coal India, but so many other, 8-10 names from the PSU space, REC PFC. So, there is certainly a bit of a lift coming through across the board. Any thoughts on names like any of the names we mentioned, Sudeep?
Well, I do like the power sector, and I've been liking it for quite some time. And I believe there is a structural bull run as far as power sector is concerned. This includes pretty much all the components, whether it's the power manufacturers, whether it's power financiers, ancillary and accessory manufacturers. As far as power financiers are concerned, we are positive on PFC, REC, and IREDA, all three from a long-term perspective. There is so much of capacity which is being set up. Whether you look at NTPC setting up about 20 gigawatt, Tata Power talking about another 10 gigawatt, Adani Power talking about 10 gigawatt. Now, these kind of capacity cannot be financed by the banks only. They require the participation in a big way of power financiers. And these three, REC, PFC, and IREDA, are the power financiers as things stand today. They will have enough and more opportunity for business, and we believe that the business volume will pick up significantly for all these three players. Some of them have withheld fundraising last year, but I'm sure as and when opportunity arises, they will go and raise funds to enable them to kind of finance the incremental finance demand for the power manufacturers. Amongst manufacturers, we have been positive on NTPC for a very long time, and we maintain our view. We believe that if somebody has to buy a power manufacturing company, NTPC continues to remain the best bet from a long-term perspective.
All right. NTPC up 4% right now as we speak. A group of stocks which are actually doing well. We're not sure of the quality of these names, but a lot of volumes backing them. You have BPL Limited, not something that we speak about often. The stock has been down the dumps in the last 1 year or so, has been down 36-37%. It's up 17% right now, BPL, and the volumes are nearly 15-16 times what we see on an average day on that stock. The other one is Shalimar Paints, another one in the paint industry, which has never made money, has been a serious wealth disruptor, currently up 17%. And then we have names like, Ola Electric, which obviously very close to record lows. And from there, it's bouncing back up around 9% on that stock too. But on the way down, we have a bunch of stocks, as our ticker team was alerting us. TFCI, locked in lower circuit, 3.2% equity, changing hands on that one, down 20%. And we have Cupid as well, which is one of the bigger movers. The extremity in 2025 was up, 570% in all of 2025. Starts 2026 straight off the bat with a 20% lower circuit. And Radico Khaitan as well, a big mover and a big beneficiary of, the premiumization in alcohol space, currently seeing some profit booking down about 5% for Radico Khaitan as well. But let's talk about the big deal which closed out in 2025, which is Coforge's acquisition of Encora, a Silicon Valley-based AI native software engineering firm, in a massive deal which was valued at around $2.35 billion. was the largest overseas acquisition by an Indian mid-tier IT company. We spoke with Sudhir Singh, who's the CEO of the company, and Shweta Jalan, who's the managing partner at Advent International, who joined us in our studios this morning. Let's listen in to that interesting, insightful conversation we had with the both of them.
This is an asset that we very firmly believe offers the value, offers the synergy. I would have been happier to pay less, but in this case, we don't believe we overpaid by even a cent. From our vantage, we've looked at just about anything that's been out there in the market over the last 2 or 3 years. When it comes to capability, when it comes to looking at an asset that was born in the Silicon Valley, which is where Encora was born, when we look at the capabilities, not just of Encora, but of the merged organizations, when we reflect on the fact that the two organizations will have a $2 billion data, cloud, and AI core, we think we're creating an asset that's, as I said earlier, it's not just a 2 or 3 year fantastic growth runway ahead of us. It's a multi-year runway. We look at ROCE. We remain committed long-term to making sure that the ROCE keeps climbing up from where we are today. But we look equally importantly at the total shareholder return. This is a growth firm. TSR is as important, if not more important, at the current stage of our growth journey. When you look back at our growth journey, again, and I say this, I suspect for the third time, a firm where the valuation has gone up almost 20 times over 8 years is an extraordinary story. TSR remains a primary area of focus for us. ROE is also an extremely important area of focus for us. It will come back to where it was over a period of time.
We are not a mutual fund, right? So, I mean, the idea is not to be a completely passive investor, but, our underlying philosophy is to back strong management teams. Yeah. When you back someone like Sudhir, who's almost like an entrepreneur CEO, yeah. I honestly don't think that, we need to be, either hovering or interfering the business on a day-to-day basis. Yeah. But hopefully, if we have a role to play and a positive impact that we can make on the business, we'll certainly, both as an individual, but more as an institution, support the organization, till such time we are shareholders. I would say, from our standpoint, first of all, this is not an exit. I think that's the most important thing that you need to remember. Why have we done this transaction? Sudhir very, articulated the whole synergy piece very well, right? We think these are extremely complementary assets, which once you put, very classically 1 + 1, we think it should be maybe a 3, 4, or 5, right? So why would we otherwise not have taken cash and done the deal? We've taken stock as opposed to cash because we feel there's a genuine long-term value creation plan here. And that's what we expect Sudhir, who's done a fantastic job with Coforge to deliver for us or from a combined entity basis as well. So I would say for us, this is really thinking about the value creation from here on, as opposed to think when I can just jump out of the boat and sell.
Okay, well, that is the big deal which happened earlier, but there's some shocking news which is coming in. Which is that, veteran money manager, fund manager, Siddhartha Bhaiya is no longer with us. He's passed away. And we were able to confirm this with multiple persons that many in our team have spoken with, and some have been able to speak with his family members, etc. And this is now confirmed that Siddhartha Bhaiya has passed away. Absolutely shocking news. Couldn't believe it the first time I heard it. 47 years old. I mean, that is not old and no time to go. But apparently was overseas when this happened. The exact cause, etc. We are yet to ascertain. But we are able to kind of confirm that he has indeed passed away. So. As I said, just shocking, and heart goes out, of course, to his family and everyone out there. I mean, really sad.
It is shocking indeed, and now we have the formal announcement that has come in from the House of Equitas as well, the fund that he would manage. And I'm reading from it. It says that it is with profound sadness that we share the news of the passing of our managing director, Mr. Siddhartha Bhaiya, on 31st December 2025, following a sudden cardiac arrest while on family vacation in New Zealand. He was obviously the driving force behind Equitas, and they were all privileged to learn directly from him. His influence will continue to guide the way they think, act, and invest. To be very honest, we used to speak often over the phone, discuss markets, have divergence of opinions, but he was steadfast in his views and was always encouraging of everything that we did out here, would always push us to ask tougher questions, question valuations in the market, and look for anything and everything that was to the betterment of investors and shareholders' wealth itself. Put managements in the spot and make them answerable for the wide swathe of stakeholders that were there in the company. At 47, this is, like you said, no time to die. At any point, there is no time to die, but definitely not at 47. So we had a very nice personal, cordial relationship.
Absolutely. I remember, never minced words, right? I mean, said it like it is. And I don't know what to say. I mean, just one of those things, shocking news coming through. We'll take a quick commercial break here. Once again, I mean, our hearts, thoughts, prayers go out to, of course, his family more than anybody else. And a very, very tough time right now. We'll take a break. We're back. More coming up.
Well, it's a shocking afternoon for all of us, but markets do markets thing. We have the Nifty Bank, which has continued to hold above those record highs, and a lot of stocks are buzzing around. As markets move on, let's go across to Hormaz. He puts the spotlight on the top movers in the market this hour. Hormaz.
The one sector that has been doing well all through the day has been the PSU names, and a lot of these beaten down names are doing well in today's session, be it IDBI Bank, be it SJVN. Coal India too is now at the highest point of the day, 7% higher on the stock. It's a 52-week high for Coal India. SJVN is up 10.5%, IDBI Bank is up 10 as well, and all of them are surging on very strong volumes. SJVN has had almost 5 crore shares that have been traded, the 20-day average being around about 27 lakh shares. IDBI Bank has had almost 11 crore shares traded. Coal India has had 3 crore shares, all of them significantly above their 20-day average. Auto and auto ancillaries too have done well through the session. Bosch is one such name, now at the day's high as well, 9% higher on the stock. It's the third straight day of gains. It's the biggest single day gain that the stock has seen since October of 2021. The volumes today are the highest in 6 months. Over 1.5 lakh shares have been traded on Bosch today, compared to a 20-day average of around 11,000 shares. The stock has now moved above all of the key moving averages courtesy of this move. It has declined coming into this month, this new year. The stock has been on a declining spree, down for 5 months in a row, and was up only 6% in the month in the entire year of 2025. Now, Shalimar Paints, we spoke about this name a few weeks ago, and it's continuing to build on to those gains. It's the 6th straight day of gains for the stock, 15% higher as we speak. The stock has gained around 30% during this 6-day winning streak. It's the biggest single day gain in the last 4 months that the stock has seen. Over 6 lakh shares have been traded here. The 20-day average is around about 80,000 shares. The stock has moved above its 50-day moving average and has now moved above its 100-day moving average as well, which was at 72 rupees. And the next level on the upside is the 200 DMA, which comes at around 85.5. And the stock has started off 2026 on a positive note, but it has had 2 very forgettable years. It halved in 2025 and was down another 30% in 2024 as well. And one intriguing move on the downside today has been Cupid. And just a few minutes ago, the stock slumped to a 20% lower circuit. It remains in that. And before this move, the stock was up for 13 days in a row. And during this 13-day period, the stock had gained 33%. Volumes are at the highest level in 3 months. Close to 3 crore shares have been traded on Cupid. The 20-day average is around 40 lakh shares. And Aditya Halwasia is the promoter of the company. He has around 32% stake in his personal capacity, and the other 13% stake is held by another entity. And the stock was one of the top performers last year with gains of close to 600%, but the lock in a lower circuit in today's session.
Take that point, Hormaz. Thanks a lot for that. Meanwhile, as we speak, we have updates coming in from UCO Bank as well. Total businesses up 3.5% quarter on quarter, up 13% year on year, which is at around 5.5 lakh crores. The stock's seen a smidge higher. Total deposits up around 1.5% quarter on quarter, up nearly 11% year on year as well. The advances number also comes up for you on the screen right now. The street is reading those numbers and the stock up around 3%. And as Prashant was speaking about some of those, up moves that we've seen in PSU names, we can add a few more to that list. We have RVNL, which is now moving to the high point of trade, inching higher. We're also seeing some traction in Bharat Dynamics, and Hudco is the other one, which is now adding to its gains as well. So Hudco has moved to the high point of trade right now. Bharat Dynamics is seeing a bit of a spike right now, Hudco at the high point. And we have Bharat Dynamics, which has also seen a bit of a spike. Anirudh Naha, who's the CIO Alternatives, PGIM India Asset Management, joins us now. Wish you a very, very happy new year, your team, your family as well. I'm looking at some of the picks that you have, and one of them, a notable one, is Jubilant Foodworks. Now, with the big deal that has taken place in the QSR space overnight with Devyani and Sapphire merging, I wanted to understand what your thoughts on the industry by and large are right now. Does it make Devyani more attractive to you with the merger? It's got a lot more muscle on it, a lot more revenue for a lot less equity dilution as proportion of the revenue that gets added to the company and the synergies. And just generally a call on quick service restaurants, because on the one hand, yes, there is that long growth runway, the opportunity in India, but on the other, there is a serious amount of competition and a lot of headwinds that the sector is facing as well. Same-store sales growth or any sort of performance is not picked up in the last, say, 12 to 18 months or so.
Right. Thank you very much for having me here. Wish you and your team a very happy new year. So just coming to the QSR space, I think so it is extremely competitive. And what we have seen through competition is the way probably a very few of them have been able to go ahead, survive in terms of top line and profitability. The good part of it is the cash flow working capital cycle in this industry is extremely tight. And that is something which keeps helping the industry. Coming to probably the acquisition, we don't want to comment on any one of them singularly, but we've generally seen not two great businesses merging together doesn't make it a great business, according to us. We'll have to wait and see how things actually play out. Given the competitive intensity, I think there have been only a couple of names which I can think of who have been able to maintain, growth, margins, same-store sales growth, and cash flows through a down cycle. Yes, if the cycle does turn around, which we believe 2026 should be a better year, we'll have to wait and see how the merger takes off. But we continue to be positive on a few of them, and we probably own one of the leaders out there.
All right, you own one of the leaders out there. Piramal Pharma, as we speak, has now moved higher as well. What's your general sense on the pharmaceutical space? A lot of people believe that maybe this year could also be one where pharma makes a bit of a comeback and we see an up move here. Do you think these ideas are investable? Are you exposed to this space in any way?
So we do have an exposure to the pharma space. We've done it through largely plays on CDMOs and the GLP-1 the play out that happens in India. It is a sector which hasn't done well also, including from a large cap positioning and the mid caps out there. We believe it's from a defensive positioning perspective, the sector should do well. But it is going to be very company specific and segment specific in that sense. And our sense is probably the CDMO space and proxies to GLP-1 would be place where we would want to stick our neck out.
Right. And any other new age company that you like right now? Because a lot of them are, post-IPO excesses coming off. Some of them with recent listings continue some of the excesses. What are your thoughts here?
So we generally like the space of digitalization happening in India. We believe it's at a very nascent stage, and that would include anything and everything which is tech-related or tech-related platforms. But as a house, we've always tried to focus on businesses where there is at least some positive OCF. And some of these businesses actually throw out cash flows in due course. So what we are trying to understand is, are there businesses where the trajectory of OCF generation is looking positive at least into the next 3 years? And there are some names out there. What we own in our portfolios, we own certain very niche tech companies, which are actually profitable, cash flow generating, and probably a leader in their space. But from a platform perspective, we would want to give it a little more time to see how cash flow generation for the newer generation businesses, how they play out over a period of time. I think it's going to be incrementally that much more important that companies are able to I'm not talking about, free cash flows. I'm talking about operating cash flows. And if companies need to actually go ahead and deliver OCF generation for it to come into our, scheme of things. So we will be cautious about some of them, but there are erstwhile good technology-based companies which are profitable, cash flow generating, and available at a reasonable price.
All right. Just looking at SmartWorks once, just pull up the intraday chart of that stock. Remember, the stock was doing well this morning. There was a brokerage note that came in on SmartWorks, recent listing, office leasing space. That stock, I think, if I remember correctly, it was Kotak that initiated coverage on the stock. Now, just about flat, but the last 1 month, it's seen a gain of almost 8-9%. There is a view on this space. There are many listed players as well, and you've looked at it through office. I see that name in your portfolio. What's your call here? What's the rationale here?
Sure. So this is, as you said, absolutely right. It is reasonably fragmented, and there are quite a few options which have actually come up post-listing from an industry where you used to have about 2 names. You've now gone to almost 7-8 names. Plus, the unlisted segment is also reasonably fragmented. What we have tried to do is look at businesses where there is strong OCF generation. Again, coming back to that tenet of looking for businesses with strong OCF, we believe some of these companies will actually go ahead and deliver more than 30% operating cash flow generation. And the capex intensity might just start coming off in certain cases. From a demand perspective, we remain positive on them. Clearly, GCC is coming in India, a lot of entrepreneurs setting up their own businesses, etc. This segment will see demand. It's only, I think, the strength of these businesses will lie in who are able to generate cash flows and hence provide a better visibility in terms of sustainability of that business, and hopefully be able to incrementally do capex out of their operating cash flows. So our tenet for owning one of the names was primarily the growth in operating cash flows over a period of time.
All right. Take that point. Short conversation, but effective nevertheless. Thank you so much for joining in. We will obviously, pick your brain on more investable themes the next time we speak. For now, wish you a very happy new year. Let's move on. Let's talk about D Street chatter. Nimesh gets us an insight into what the dealing rooms are speaking about, as well as a few tidbits about the stocks that are up and about in trade. Nimesh, first up, the dealing rooms would have been shocked with the news that, just came on Siddhartha Bhaiya.
Oh, absolutely. Young age, dynamic guy, and just sad news to start the year with. So, of course, this has been a big talking point across all dealing rooms, and we have a confirmation that it's sadly it's a true news. So, nothing much to say there, Mangalav. Clearly it's a very bad start to the new year, so to speak. From a market perspective, a good start to the new year. Nifty and Bank Nifty both at all-time highs, and again, it looks like it's a combination of short covering as well as lack of selling pressure. That actually explains the kind of move we've seen in a lot of the F&O names in today's market. Again, the sector which clearly stands out is the PSUs. And within PSUs now, my sense is there is a bit of rotation as well happening. So the laggards of last year, typically the likes of REC, ONGC, they are seeing a bit of buying interest from larger institutions from a PSU perspective. So that's something which is standing out today. Technically, 26,300 is a level to watch. If that gets taken out, the market could see further short covering rally in the days to come. But again, the PCR is now, the Nifty PCR is now at 1.51. which normally tends to suggest that you see a bit of profit booking there. So watch out for that. But generally, there is a bit of short covering as well in many of the F&O names. The pre-quarterly updates will start in the next few days. So that's something to watch out for individual names. But broadly, it looks like today's rally is a combination of short covering as well as a bit of lack of selling as well from large institutions.
Nimesh, in terms of individual names, what's on the list?
Well, the first stock on my list is Piramal Finance. We normally don't talk too much about this stock, but post the demerger and the listing, the stock is up almost 50%. Good volumes as well. I guess some bit of HN activity is HNs are quite active as well. And also for Piramal Finance, the next trigger to watch out would be a potential rating upgrade. We've seen what happened to Shriram Finance after the rating upgrade. Similar expectation is there for Piramal Finance as well, and hence that stock is buzzing in trade today. So that's the first name. Second stock is PG Electroplast. The entire AC theme seems to be playing out in today's market, in today's day. But PG stands out because of buying interest, and I understand when domestic mutual fund is an aggressive buyer in the last couple of days in PG Electroplast. So Q3 earnings could be quite interesting. The third name is ITC. For second day running, the stock is under pressure today. So almost down 15%. And one of the long FI investor has been an aggressive seller. So even today, there is very strong delivery-based selling, and that too from that large FI investor. And the last name is RR Cable. Again, it's buzzing in trade today. Volumes are on the higher side. But also there is an interesting City note in the morning. They've put out a 90-day positive catalyst to us, and they expect a very strong Q3 for RR Cable. So that's the reason why even that stock is buzzing in trade today.
I think we've hit a, as we are running through the list, Nimesh, stay right there.
Yeah.
But we've hit a new all-time high. The earlier high was on the 1st of December, and we basically clawed our way back. I mean, so it's just, a bit of a pullback after the high on the 1st of December, which was, and we got to about 25,700. So there was about there was what, 500 odd point pullback, maybe a little more than that, from the 1st of December all the way to the lows on the 11th of December. And now we are back at all-time high. So I'm not sure if there's anything very much more to add, but we're back.
Just a couple of things. All through today's trading session, HDFC Bank has been fairly well bid. That explained the kind of move that we saw on the Nifty Bank, and that stock's moved to the high point of trade once again. The other one is Reliance. Did extremely well through the course of trade, and that was powering the index ahead as well. Right now, that stock too has moved higher, closer to that 1600 mark, very close to its record high on that counter too. And I think the last push on the Nifty has come in from the IT pack, which was missing in terms of its contribution. So, TCS, just pull up the intraday chart of TCS. You would see that coincide with the intraday chart of the Nifty as well. So the IT index, which had fallen, had taken the Nifty below or kept the gains, just sub the previous record high. And now we have an up move coming in on TCS as well. So for all practical purposes, fresh high on, day 2 of the new calendar year. But we have to be mindful of the fact that Nimesh had told us that, it's more lack of selling and, than fresh buying, which is taking place right now. A clear trend only emerges as we get volumes, in full force for the market. But as on cue, we do have Nilesh Shah of Kotak AMC joining us now. Nilesh, a happy new year. For what it's worth, a good start to the new year with the Nifty at an all-time high, the Nifty Bank doing well, and there's all-round optimism. Would you agree, or is there something that we'll have to monitor and move along as the year passes?
So Mangalam, Nifty and Rupee, one will be at all-time high, other will be at all-time low. There's no point in talking about that because that's how their character is going to be. And undoubtedly, as we had shared in our annual outlook and discussion on CNBC-TV18, CY26 looks better poised over CY25 from earnings growth as well as valuation point of view. Now, sometimes market decides to ignore it, sometimes it decides to price that in. So anyway, it's a good start to the year.
Nilesh bhai, good morning. While we talk about the new high, some sad news as well. I don't know if we put out news that Siddhartha Bhaiya is no longer with us, passed away. I don't know if you knew him. For many of us who interacted with him on and off, really shocking news.
Undoubtedly, Prashant Bhai, a very shocking news. A very talented person who had high conviction, took bold call and made a lot of money for his investors. Unfortunately, moves away from our world. It's just a reminder that beyond money and beyond market, there is a life. And while you should focus on creating wealth, one has to also focus on creating health.
Absolutely, 100%. Wealth creation, but also, at the end of the day, the use of wealth is to essentially enjoy and have a good life, which also shows you the fickleness of life itself, right? I don't know what else to say. Nilesh bhai, as we look ahead, and I think you put some of this into the in your annual outlook as well. Any one simple way to kind of gauge, and it's very simplistic, but it works. Not all of it works, but sometimes it works. Just look at where there has been a lot of damage in the prior year or a lot of underperformance in the prior year or the last 2 years. And those sometimes turn out to be better performers of the coming year. Anything comes to mind broadly as a theme or a sector?
Undoubtedly, Prashant, there is a popular theory called dogs of Dow, and they just see the stock rotation year after year. But one thing we have learned in the markets over the years, every price is there for a reason. And the downward or up move happens because there is a catalyst which will move the prices. So if we see IT sector has been one underperformer last year, even pharma sector has been relative underperformer. And some of the retail and tobacco company has also suffered in recent times. Now, for IT sector, growth is the only solution. You can't have higher P with a double-digit P with a single-digit growth. So companies which will be able to catalyze growth certainly could be looked at current valuation. Because of dividend yield and high return on equity, there is some sort of downside protection in IT sector. In terms of pharma, again, valuation versus growth paradox comes into play, and pharma will be more bottom-up stock picking. In terms of tobacco, clearly the higher tax collection came as a not so positive surprise or shock to the market. I think a lot will depend upon whether companies are in a position to manage volume growth despite price hike. So overall, look for a catalyst rather than buying a stock just because it has fallen. There has to be a catalyst in place for dogs of the Dow or dogs of the Nifty to bounce back.
Yeah, absolutely. Prices are there for a reason. So it is a necessary condition, underperformance, but not a sufficient condition for them to do well and turn around, as you said. Thank you very much, Nilesh Bhai, for joining us. Good speaking with you. Quick reaction coming through at this point. Gautam Shah is also with us of Goldilocks. Gautam, good to have you here. Just a quick technical view here. There are pullbacks are short-lived, smaller, shallow. You tread water for a while and then come right back to where you were, and I guess that's what's happened. How would you take it from here, and where would you focus your energies on?
Hi, Prashant. Good afternoon. I think till a couple of weeks back, we had a scenario wherein the markets were near 52-week highs or at 52-week highs and lifetime highs, whereas the sentiment was pretty much near 52-week lows. I think that's the kind of disconnect that we have been living with for the last 1 month. But I think today's move and getting past 26,300 just validates that domestic money and the economy seem to be pretty much on track. I think the best way to describe last year, 2025, was the markets climbing a wall of worry. Because I think we dealt with every single negative aspect of local and global financial market, and we've come out stronger. Charts have anyway been very, very strong. We've made the sequence of higher tops and higher bottoms, and I do believe that the best is yet to come. However, this has become a very stock-specific and a theme-specific market. So while the index will give you decent returns, it will not have any out-of-the-box kind of a move. You need to be in the right pockets to create alpha this year. Stay committed, stay the course. I think the India story, the best for the India story is still yet to come.
Right, Gautam. A large part of this up move also, the first couple of days of the year, not backed by a lot of volumes. Chartically, do you have a call on the Nifty and the Nifty Bank this year? And what are the top stocks that, according to you, will be outperformers in 2026?
See, I do believe that the index is not going to deliver supernormal returns this year. I mean, our working target on the Nifty is about 28,400. While it might sound big in percentage terms, it's nothing. And I think many other markets in the world will do something similar or better. But then we saw what last 6 months did for metals. I think some of the non-ferrous metals delivered anywhere between 50 to 70% upside. And I think there are newer themes and sectors emerging. So I think the trajectory for the indices are important, which is the Nifty and the Bank Nifty, and the trajectory is clearly up. Once you follow a top-down approach, then you go about theme picking and stock picking. And I do believe that the opportunity of this year is the PSU pack. In fact, we've been saying this to our clients in the last 1 month. And with what has happened in the last few days, there is a very clear validation that the PSU comeback is for real. Valuations are comfortable, dividend yield is there, under ownership, nothing to do with foreign policy, and very, very good charts. So I think metals and PSU would be my two top bets for this year.
All right, gentlemen, thank you so much for joining us on what is a red letter day when it comes to the market. Another record high, the Nifty at a record high. The Nifty Bank led it from the front, and now we have all the other index heavyweights doing extremely well. We take a short break. On that note, come back. Mayuresh Joshi of MarketSmith India joins in for the final few minutes of trade. Holding at record highs for the frontline index, 5 minutes to close. Another decent week for the frontline index in the Indian markets. Now, the latest addition to the gainers is SBI. SBI has moved to the high point of trade as well. We have Mayuresh Joshi, Director Research, MarketSmith India, joining in now. Mayuresh, wish you a happy 2026. The market's doing well. A lot of individual stocks bouncing as well. As we speak, the big deal that took place yesterday between Devyani and Sapphire, what are your thoughts on the QSR space? And the second one, the big accident of the last 2 days has been ITC. Your thoughts there?
Afternoon, Mangalam. Season's greetings to you, the entire team at TV18, and all your viewers as well. Hope it's a healthy, wealthy, and a prosperous year ahead. When it comes to Devyani, I think you did a very interesting piece, Mangalam. So I think that was very, very interesting. Kudos for that. However, I think our sense is that the EPS ratings still look on the softer side. The synergies will no doubt play out over the next few months as the merger process starts getting culminated. And therefore, I think both from a revenue and a cost perspective, synergies should start building in. However, I think competition still remains intense. Post-GST rationalization, what kind of an impact does that have? Specifically in terms of same-sales store growth is something to be watched out for. What do they do with their store formats, whether it's in-house dining or a different model that they're probably expected to pursue is something to be watched out as well. And therefore, I think sentimentally positive for Devyani, but how does this translate into numbers is something we watch out for. The EPS rating still looks soft at MarketSmith India, and therefore we'd like to ideally wait and watch, at least for Q3 numbers, and then the commentary in terms of expected timelines for this merger itself. For ITC, I think the kind of impact that the excise duty hikes will have an impact. But we all know that the cigarette business is a highly demand elastic business. And therefore, I think the kind of volume loss that happens per stick might get compensated with the price increases that you're expected to witness that will happen. However, I think the expectation largely is that it might still have an impact in terms of earnings going forward. When it comes to their other businesses, whether it is FMCG or the other active trading business, that might do well. But the other point that I want to make is the kind of investments that ITC is going to make in the other products that they're going to develop. But what we've seen earlier historically in the past, when ITC was developing its FMCG business and creating those brands, a lot of cash flows were getting into that business where ROC probably got cramped up. And therefore, I think the stock price is just consolidated. I think it might just go through a typical consolidation mode based on both these factors for ITC.
Mayuresh, what I think I think we're just counting down to the close, right? 3 minutes, 2 minutes to go. So came to you late. Apologies for that, Mayuresh. We were just discussing metals with Gautam, and he was saying that metals and PSUs are perhaps the two areas. I mean, chartically and directionally, kind of speaking. Nimesh, by the way, is going to put out a piece a little later on Editors Roundtable looking at the big laggards for 2025 and if it means anything for 2026 in that sense. And I think a little birdie tells me IT is on that list. But just your thoughts. I mean, if you have any conviction ideas in these three areas.
Afternoon, Prashant. No, so I think from metals, I think we did discuss Jindal Stainless a few weeks back. And our sense is that structurally, I think the kind of market share that Jindal Stainless probably has will probably impact it positively going forward. At the same time, the reported EBITDA per ton in the first half has inched up close to 22,000 rupees from 19,600 for the entire year gone by. They're adding on capacities, which means they'll have a large share in terms of the overall stainless steel market. And therefore, Jindal Stainless and the kind of application that stainless steel probably has and expectations in terms of operating leverage playing out, I think you might see better margins going ahead. Leverage is relatively lesser at 0.3, 0.4 times as far as debt equity is concerned. So the rating rankings, what we've seen cancelling look fine. The other stock that we've kept on our radar, specifically from the metal space, and what I've discussed time and again, is Neyveli Lignite. It has a strong move today. But our own sense is the capacity additions that Neyveli Lignite is doing, NLC India, the kind of additions happening both in terms of thermal as well as renewable capacities, and the sheer expectation in terms of margins actually expanding. They're expecting margins to go up to 45% from 38% in the next 2 years, and margins to probably reach 50% by FY30. So I think a couple of interesting ideas that we.
Okay, I think Mayuresh, we'd like to say thank you. I know it's a shorter conversation, but useful with some of those ideas, which I think will resonate with our viewers. Appreciate your time here, Mayuresh, and thank you for joining us. Have a good one over the weekend. Well, I think 0.75% higher on the Nifty, 26,333, and as we wrapped up, should I say this is the first week of 2026? I mean, the new year and the end of the year was bang in the middle of this week. But anyway, we are for the week up about 1% on the Nifty, and I think the Nifty Bank for the week is up about 2%, nearly 2%. The mid-cap index is up about 1.7%. And I think the small cap index is up about 0.8, 0.85 odd percent as well. So it's not a bad looking Friday to Friday to close this one out. Mangalam.
Individual stocks surged a lot this week, and a large part of them on low volumes, but gains nevertheless is what we saw. Towards the end of trade, we saw big moves in all the PSU names. So in the broader markets, SJVN was up 11%. We saw decent traction in NHPC, Irida, Coal India was the top Nifty gainer. Among the ones that lost, APL, Apollo Tubes, Berger Paints were notable losers. And we also saw some losses in the form of Cupid, Radico Khaitan and Sapphire after the deal was announced. The biggest casualty of this week has to be ITC and Godfrey Phillips. But with that, we'll wrap up on this edition of Closing Bell this week on the markets. Come back next week with more volumes and perhaps a clearer direction on where the market likes to be in 2026. But you don't go anywhere, because Editors Roundtable, our Friday special, comes up next.